Hi, I'm Juan Carlos Artigas, and I'm here with my colleague Luis Street. We're going to discuss some of the key findings of our latest gold demand trends report covering the second quarter of 2025. Lou, Q2 was another quarter where gold set new records. Now, behind this, it was a combination of a weaker dollar, overall heightened geopolitical risk, and uncertainty surrounding the trade policy globally. Now, how did these factors influence gold demand?
Yeah, the environment that you described was really conducive to gold investment in the second quarter. Heightened geopolitical tension and uncertainty over trade relations and tariffs feeding into that safe haven motive. A really weak dollar, expectations of future rate cuts feeding into the opportunity cost motive. And where we really saw that coming through strongly in the numbers was in demand for global gold-backed ETFs, which added 170 tons in Q2. Coming on the back of what was already a strong Q1, that gave us kind of the biggest inflows for a first half year since 2020. And what was particularly noticeable this year is just the global breadth of those inflows, particularly in Asian listed funds. And that's remarkable when you consider sort of the relative size of these regional funds. So in terms of holdings, the fact that these funds are a fraction of the size of North American listed funds, and yet they matched the 70 tons of inflows during the quarter was really noteworthy.
Yeah, and sticking to investment, the data also suggests that bar and coin demand in Asia, especially in China, was quite strong. Now, was that strength also visible in other parts of the market?
Yeah, exactly. So at a global level, bar and coin investment was up 11% year on year. And again, looking at the first half, it was the strongest first half year for bar and coin since 2013. Europe, actually, interestingly, has seen a really decent recovery in the past couple of quarters. It had a very weak 2 or 3 years, but we've seen that starting to improve in 2025. And that's really been a combination of flows attracted because of the high gold price, but also increasingly safe haven motives coming through there. But you're absolutely right. China was sort of the leading light in the global gold bar and coin market in Q2. Demand there has been quite elevated for a few quarters now, but particularly so this year. And so much so actually that in Q2, bar and coin actually exceeded gold jewelry demand for the first time in our gold demand trends data series. In terms of what's been driving that, again, the high price has been a feature, but it's also, it's the lack of good performing alternative investments in China. I'm thinking sort of real estate in particular, and also sort of increasing concerns about the health of the Chinese domestic economy.
Yeah, and actually globally, we do expect investment demand to remain robust on the second half of the year, partly as interest rates come down and there's a general market uncertainty. However, we do expect investment flows to pick up only if conditions significantly deteriorate, either financial or economic, right? And sticking to another important component of the gold market, central banks, it has positively contributed to gold performance over the past couple of years, and we continue to see fairly healthy buying overall in the second quarter. But what were some of the key highlights?
Yes, as you say, demand was still healthy. 166 tons added to global official gold reserves in the second quarter. Now, that was a bit of a slowdown from the levels that we've seen since buying by central banks really exploded in mid-2022. But if we take a longer term look at sort of average levels since they became net buyers in 2010, we're still healthily above those kind of typical quarterly averages. And we know from the results of our latest annual global central bank survey that they remain very favourable towards gold. They almost unanimously expect global gold reserves to grow over the next 12 months. And in terms of what they tell us is driving their motives for buying it, it's gold's role as a safe haven, as a diversifier, its performance during times of crisis, and those all still remain very relevant factors. So we're confident that central banks remain healthy buyers of gold, albeit that we have seen a bit of a slowdown in the pace of that buying.
Exactly, and to your point, we do expect central bank demand to slow down in 2025 compared to 2024, even though it may remain significantly above the 10-year average. And look, overall investment demand was strong, and that in itself had a positive effect on price. Now, we do know that high price levels can have a dampening effect on jewelry, and that's to a degree some of the features that we saw in the second quarter. Volumes were coming down, but if we look at value, the picture is different.
Exactly. It's no surprise in a record gold price environment that we would see consumer demand for jewellery declining in volume terms from a pure affordability point of view. But when you translate those volumes into value because of that higher price, we can see that actually the value of what people are spending on gold jewellery is going up. And we're seeing those two measures, the volume and the value, kind of increasingly diverge. What was particularly notable about the most recent quarter was that there was every market bar one saw those year-on-year declines in volume, but every market saw an increase in value. Looking at sort of specific countries, China and India are sort of the two big global heavyweights. They're by far the largest markets, and they both saw significant year-on-year declines, price-driven, as we've discussed, and that had an outsized impact on the global total. The one market that was the exception in terms of year-on-year volume growth was Iran. Clearly there's regional geopolitical impacts there that was affecting that market, and really what we saw for pushing jewellery demand higher was investment motive. It's a high carat jewellery market, and it was a reflection of consumers wanting to sort of get their hands on gold as an investment in whatever form. But that's not something that's specific to Iran. We talk a lot about markets across the Middle East, but actually particularly in Asia, where they're very price sensitive, where there is a strong investment motive to buying gold jewellery. And that's a reflection of the fact it's typically high carat, so it's high purity gold jewellery. It's priced very dynamically on almost sort of a minute-to-minute basis, depending on the weight of the fine gold. There's much more of an awareness of the sort of investment value of the gold in the jewellery that people are buying.
And that leads us quite nicely into the flip side of jewellery, namely recycling. When we see weakness in jewellery markets, we tend to see a pickup in recycling. Whether it is because high prices encourage consumers to sell some of that gold and capture the gains, or because there are difficulties in income and economic conditions. Now, this time, we haven't necessarily seen exactly some of those trends. So can you tell us more about that?
Yeah, as you say, in a price environment that we've seen, we would typically expect recycling to respond quite strongly. And that hasn't been the case. It's only 4% higher year on year. Now, partly that's because, as you say, we haven't seen sort of real levels of economic distress, meaning that people are sort of having to rely on selling their gold. And there's also an element of price expectations. If people are seeing the gold price, reach these record levels, to some extent, they might hold off kind of waiting to sell it before it might increase further. But one market in particular where we've seen some interesting dynamics going on this front is India, where people, rather than selling their gold outright, and as you say, capitalizing on the record prices, they're choosing to put it to work. They're either exchanging their old pieces of jewelry for a new piece, sort of effectively trading it in, or increasingly they're pledging it as collateral. So they're literally sort of taking their gold jewelry and giving the value of that gold jewelry against a bank loan or a loan from their financial institution.
Yeah, and that is indeed quite interesting. And moving to another sector that has been catching people's attentions, technology. So it's the smallest in terms of volume. However, it can have a very positive effect on the daily lives of pretty much everyone.
Yes, exactly. We're all, whether we know it or not, using things that contain gold on a daily basis. Demand in this sector has been quite challenged this year, and that's really sort of centered around the uncertainty over global tariffs. So suppliers, manufacturers, distributors of consumer electronics are having to gauge, when tariffs might be coming into play, to what extent, what impact that's going to have on demand for their products. So that's having an impact along the whole supply chain. That's been a headwind, but then there's been support from AI. Now, clearly, that's a really nascent area of demand. Gold is a critical component in much of the infrastructure and the devices that enable AI. So we're positive that this will be a source of growth in demand for technology going forward.
Well, thank you so much, Lou. So we've covered the major themes driving demand and supply, but that's just really scraping the surface. And the full report has plenty more data, insights, and analysis. And you can download it from goldhub.com.